Okay, welcome back to AI and Intelligent Automation Live. So one of the great things about a virtual conference is that you can ask questions of our experts without having to put your hand up in front of a huge room full of people, which I know can be really intimidating for me anyway. You're also going to get to hear from speakers from all over the world. So we just heard from a speaker in the US, and now we're going all the way over the other side of the world to Australia, although Anne does tell me she's in Singapore today. Our next speaker is called Anne Furlong. She's a director for APAC Customer Team and Global Enablement for BlackLine. And she's going to be speaking about something very practical, very specific, and very useful, I think. And that is robotics in finance and accounting, separating fact from fiction. A little bit about Anne. She, as I said, she's a director for APAC Customer Team and Global Enablement for BlackLine. They're the leading provider for finance controls and automation software. Anne joined BlackLine in January 2011 from a company called Tabcorp Holdings. They're an American wagering, gaming, and keynote operator and one of the world's largest publicly listed gaming companies. She worked there in several roles, with the latter part of her career focused on process improvement within the shared service environment, which I know is something that a lot of you guys focus on and will be very interesting to hear about. So what's Anne going to be speaking about? She's going to be speaking about how RPA, robotics process automation, can automate manual tasks, manage workflow and standardize finance and accounting processes across complex organizations and IT landscapes. More specifically, we're going to be looking at how to automate account and financing processes, how to increase accounting productivity, and also how to improve shared service and enterprise efficiency. So I'm going to hand over to Anne, but I just want to remind you to post your questions in and we'll endeavour to get those answered for you. Over to you, Anne.
Okay. Thank you, Sally, and thanks to everyone for taking the time to actually join this session today. So really what we're really going to be focusing on is the challenges. What is RPA? Trying to understand what's really factual, where are we existing today, and what's more futuristic. How we then prepare for it, because it's all well and good about talking about it, but how do we prepare, and then how are we going to be successful? We've got some case studies and some ideas on what's really changing in that world. So really what we're going to go back to is actually focus on where things have actually changed. So there's a big shift between the CFO and the controller. And really what we're doing here is we're seeing that there's a dramatic change in the office of the CFO to really focus on being that strategic advisor to the actual business. So it's more than just managing the finances and the stewardship of the organization. It's really about building that business partnership and really start focusing on how we can actually drive the efficiencies and utilize technology. So using technology as a disruptor to drive through into that RPA. And really what we want to try and do throughout this process for the office of the CFO is really enable the organization to drive much smarter decisions and really ultimately keeping that continual focus on process improvement. That's all well and good in the real world, but there's always obviously going to be some challenges to what the office of the CFO is actually facing. Now, the number one challenge that we're really seeing is the bottleneck in financial closing processes. So there's a lot of manual effort today, and this is where we want to start to look at how we can actually move away from that manual, repetitive work that our users are seeing and actually start engaging other technology, RPA. So simple things as, do I need to actually have a person run a report? Can I have a system do it for me? Or if I need to save this to a particular location, why can't I have a system do that for me? The next big roadblock that we see is the actual retention of finance. So the human capital component, because we need to actually start focusing on how we can actually retain good people to actually drive into that more robotic, automated process. And when we asked the organizations from the Hackett Group, as the survey that was done, only a third gave their CFOs a passing grade on really driving forward in that RPA environment. Then another factor is really understanding the IT processes and enabling the IT and the finance teams to actually work together collaboratively to actually reduce the risk to the organization and engage in more SaaS products to actually have a faster execution and delivery. And then it's the barrier to the mobility. So we want to start saying that we want to remove a lot of the other major challenges to actually drive through into having SaaS, having mobile people. With millennials, people want to be on anytime, anywhere, and not be hamstrung and tied to the actual office. So we're seeing about 48% is facing that as a major roadblock. But what does that overall mean with these challenges is that there is a key to the transformation. And so what we're looking at where they exist today, as a CFO, there's a lot of focus on the accounting, the doing of the financials, and then 20% is focused on the protect and 25% on the leader. What we're saying and what we're seeing is that this office of the CFO needs to be headed more into that stewardship. So 50% of their time should be focused on being the leader, being strategic, being that overarching view of being that business partner, with still a smaller component on the protector, the stewardship, and then on the finance as well. So we can't put that to one side, but we really want them to be focused on being that strategic leader to drive the organization forward. But then what do they want? So how do we achieve that? So really, CFOs are no longer looking for their teams to be heavily focused in Excel. Again, there's better technologies out there to actually drive this into the automation. We want to have greater skill sets in communication and collaboration, but the highest degree that we're looking for from new people, new talent to join an organization is on the ability to adapt to new technologies. So always be looking to technology to drive that forward versus looking to, let's just write an Excel macro, or let's go back to what we're doing today. So the office of the CFO is changing. And by having these changes and wishing to move away from just that manual repetitive work, that will have a major impact on productivity. So if we've got 69% of our users actually working in the manual space, we can give over that component of time to driving technology to improve the efficiency. And then even if we look down to intercompany reconciliations, 52% of our users are spending time on intercompany recs, and that should be done within the actual system as well. And then overall, we talk about the human capital. This is our employee engagement. So if we want to try and get to that more efficient driving RPA, we need to start looking at how and what people are doing within the organization, where they're spending the most amount of their time. We're looking at where they have their workload. So if we've got somebody that's heavily overworked, yes, there's going to be some overtime that's involved in there, but are they going to be happy? Are they going to be in the right frame of mind to actually drive it forward, to actually move into a more future view and actually add value in the organization? And really, it's about understanding from the financial and accounting space is how we can actually remove the frustrations, the obstacles to drive this forward. So how do we do that? So to get to that next step, where we're actually driving that futuristic view in order to actually get to the RPA and better engagement for employees, we're looking at the measurement. So what are we doing today, and where do we need to get to actually measure how well we're doing? We need to understand the business performance, to understand what's actually driving us to get to that next level. Collaboration. Now, it's not just collaboration within the finance team, it's also another CFO collaborating with the security team, with the technology teams, to actually look for technology so that she can actually bring in and drive that more futuristic view, where we're having systems doing repetitive manual work and freeing people up to be more value-added strategic partners. And that's where we talk about the collaboration and the partnership with the office of the C-levels, the CX, need to actually work together to drive this forward. But then we look to RPA. So there's a lot of talk about RPA, so that robotic process automation. And we're going to run through a couple of definitions, and what we're going to be seeing is some commonality across it, but what does it actually mean for us as an organization? So it's about the application of technology that allows employees in a company to configure computer software or a robot to capture and interpret existing applications for processing a transaction, manipulating data, triggering responses, and communicating with other digital systems. That's what we're looking at from an RPA perspective. Deloitte have actually said it's really about creating that virtual workforce, so that back office process center, but without the human resources. So again, looking to what's repetitive in nature and taking the human being from being the robot and looking to technology to drive that forward. Accenture, again, common theme that we're seeing here is about that partnership between the human and the technology to drive forward to actually eliminate that repetitive robotic process that we're doing today. TechTarget, we now start introducing that concept of AI, artificial intelligence and machine learning. What does that actually mean in this whole process of robotic processing automation? And then finally, what I do like about from Leslie Wilcox of the Professor of Technology for Work and Globalization from the London School of Economics is RPA is taking the robot out of the human. And we're freeing people up to do other tasks requiring human strengths such as emotional intelligence, reasoning, judgment, and interaction with the customer. That's what we're trying to do through this process here. Now, we've been talking about a number of key terms in this process. So we're talking about the repetitiveness. It's rules-based, the digital workforce, machine learning, and artificial intelligence. But what we're seeing today in the real world is that even though we hear the terminology about AI, we hear about the digital workforce, there isn't that major concept of that really driving it forward. What we do see is that there is a lot of repetitive tasks, and it's definitely rules-based. And so it's looking about those discrete end-to-end processes and saying, what can we do to automate and move forward in that space? And this is where, even though we talk about machine learning, it is coming, but we're not quite there in that process. So at least today, we talk about the digital workforce replacing jobs. It's a long way away, but it is coming. We might have a problem in, say, 10 years' time when, in fact, AI has really reached a height that work is being done across the board for us. And we're not even just talking about things like looking at transactions. We might be looking at artists and painting and becoming the best cinematographer winning the Oscars, but that can be all done through technology. But it is coming, it is on its way. Now, this is where we got this picture. This is William Bourne, 1535 to 1582. So now we're going to be talking about a time cycle in the 16th century. And he was one of the first people to hypothesize the concept of a submarine and how it might work. Back then, we would have thought extremely futuristic, it's never going to exist. But in reality, science fiction does become reality. And things have accelerated in such recent times that you can now have your own personal consumer of the actual submarine. It's not just for the military. So science fiction is on its way and it does become reality. And we see lots of examples of that. Another one is that popular one that we see about the Google car going around and taking real snapshots for the GPS so we can actually look on the computer and see where we're going to go and what it's going to look like at a point in time. So it's not just specific to the business, it's about specific to our working life as we have today. But this is still a narrow form of AI and the kind of thing that will get into the basic side of accounting, which will be supported by things like robots. Robotics is coming, they're here, and we're seeing lots of different automation today. But some of the challenges, I guess, is really about the hype and where we want to try and break apart the fact and the fiction today is talk about the realities on the ground and what we see in the market. An article by McKinsey called Burned by the Bots, Why RPA is Stumbling, breaks it down in a really interesting way. One routine processes are more complex than anticipated, where we have the zero FTE back office, the term that I was jumping to earlier when we were talking about digital workforce. A zero FTE back office is a long way away because even the most routine tasks requires a nuance of understanding. And for example, in the case of, say, processing invoices, well, the invoice provider adjusts the design of the PDF, depending upon where your screen scraping tool works, this might prevent it from being consumed. So you have to have a process of reevaluation of the process, reprogram your automation so that your robot can do what you want it to do. So it's not just about understanding, this is what I set up today, it's about understanding what that's actually going to mean in the future. And we still need some care and attention. But highlighting that if you automate 30% of automation, it doesn't correlate to a direct 30% reduction in cost. And then we have another article from Horses for Sources, an analyst firm that is very much in the forefront of the robotics. And they write a lot of interesting articles. And there's an interesting article recently by Gardner that 96% of the RPA customers are seeing real value. And really there was a spin on it to say, are they really doing that? Because what we're seeing is that buyers are saying it's a really rosy picture, but they're not really seeing that they're getting the right benefit at this moment in time, because there's a general lack of expertise in the overall market. So there are some real challenges out there. And this is where we start bringing in the view of the digitalization of the rudimentary process in the underbelly. So we're seeing that there is a direct correlation. There'll be a reduction in the cost as we go through the RPA process through more automation of 10 times the size. So we definitely see that RPA is increasing, and there'll be direct correlation of increasing of the services as we go through in the next, in this case, was 2016 to 2021. But with RPA, and if we understand where we're going through with this process, it's, well, how do we start preparing for it? Because we have to have some considerations for it. We have to try and understand that preparing for it is not that there's going to be the silver bullet. It's not a solution that's going to fix everything. And we need to start looking at how we can actually make it suitable. So when we start preparing for the transformational process, is understanding that RPA is very powerful, and we need to ensure that we're looking at the processes and understanding when it actually makes sense to actually engage it and when it doesn't. So if you have a poor manual process today, by automating it, you still have an automatic but a very poor process. And we need to look at it from McKinsey and Company from their previous article, is that it is a part of a toolkit, and it really will help to connect the human component to the actual overall process. But we need to understand where it fits within the whole process to actually add value and not look at them to solve problems. So it's about that enablement between the two, the human component and the actual technology. Now, when it comes to the shared services, they've actually come up with some ideas about how we can avoid common mistakes. And really where we talk about this is about involving IT as early as on in the whole process. So sometimes in the finance world, we like to get forward and we start doing things on our own, and then we look at IT as maybe some people who we can talk to when we're a little bit further on our journey. Engage IT up front so that we can actually ensure that we have that understanding of where we want to get to, and use the IT with their technological experience to come up with the best solution for us. Also understanding as a global organization what actually works best for us locally and also regionally. So, and also from a global perspective, are there certain nuances in how we actually prepare things that need to be considered? We also need to ensure that we engage the change management and working with our employees, so we don't set ourselves up for failure where we actually struggle to actually start seeing some benefits there. And recognize that robotics is part of a tool in an overall process, and look beyond the short to medium term. We need to start planning for the future. And this is where we need to start looking at, well, what are the rules? How do we define it? How do we ensure that there's some measurement that we're actually achieving what we need to achieve? Is the business aligned to what we're trying to do here today? We want to make sure that whatever we're bringing in is not going to slow down the process. We need to ensure that if there's a problem with say, part of the execution of a delivery, say, of a report, If the report doesn't run, what's the trigger to let us know that it's going to work? If we're pulling together many disparate systems, how do we know when something hasn't worked? Again, we're removing that human component to actually do all that checking for us, but we want to start looking at that automation to say, let's bring in those feeder files and let the system confirm that it's working or it isn't working for us. But with that, we need to start thinking about, well, how do we build it to be successful? And this is where we talk about that continuous improvement across the board. So we need to understand, what are we doing today? What are the challenges? What are the gaps? What's our risk? How many people have we got in that process? Then we need to look to that future state. So as we're doing any balanced scorecard, we need to look at the current to the future state. Imagine what it would be like. What would I need to do? Understanding what's that low-hanging fruit that we can actually get onto much faster. And then identify with that any critical areas that we need to focus on. So it might be low-hanging fruit, but it's not a critical or mission-critical part of our business. We might need to focus on that as well. What's the design for that? And then look to each of those items be broken down into much smaller, bite-sized pieces to understand, well, what do I have to do? How do I do it? Are there any dependencies? And remembering we need to automate what works. Let's not automate a process just because we can. Let's understand when it actually is suitable to do that. And then we need to have the measurement. How do we make sure that it actually is working for us? So having that continuous review of what's going on and making adjustments as we need to. So not just accepting that we're going down this path, let's understand, is it right to actually continue, or do we need to basically make a little bit of a turn and go in a different direction? Understand where we are in the macro trends, what's happening out there, compare successes, and make it so that we're actually continually reviewing and making sure that any problematic areas or potential for issue are being identified. And then continue to do that. Have your team come together and continue evaluating that journey as we move through there. And as we start removing all the low-hanging fruit, some of the items may become a little bit more challenging. And then we need to start saying, okay, let's start breaking those down into more reasonable path sizes. And this is where we come to the financial world, where we need to start looking at how we can actually manage by exception. So we can't do everything. And this is where we start looking at technology and finance to look for that automation. And really, ultimately, we want to actually embrace and empower our financial teams to really be that strategic value operator. They need to be able to provide that real-time information to drive that standardization and automation and continually analyze how we're doing. And to do that from a financial accounting world, let's break down that rigid accounting calendar that we're also used to doing and see, well, what do we need to change to meet our business needs? Why do we have to do those reconciliations after we close our books? Just because we've always done it that way doesn't make it right. Why can't I start processing journals earlier on in that process? Why can't I review my numbers on a daily basis? And then be looking for the team to really be on that journey for driving accounting operational efficiency. And this is where we start talking about continuous accounting. And it's really a journey that every organization is going on to really embed process standardization, automation, continual review to really drive the office of the CFO beyond the transactional, repetitive nature of where we've been, become that real strategic partner of the business. And we've seen a lot more of that activity in businesses and in particular in shared services. But how do we do that? So we need to, if we're driving automation, have a rules-based environment where we have standardized templates, workflow, efficiency, and the ability to have information coming in, to have exception management. So we're not looking at everything, having the ability to look at the outliers, the anomalies within the system, so that we have some triggers in there. Taking the time to do the corrective action, whether that's for an automated correction through a journal, for example, or whether it's a manual intervention. Understanding and benchmarking where we exist today. So it's really about that continual cycle of review. And how do we do that? Through different modules. So we'll have our transaction matching solution. We'll then have the automation of journals to drive through into daily reconciliations. There's no need from a finance perspective why we can't do our recs on a daily basis and manage our business. Again, it's understanding the exceptions of the recs that we need to do versus just doing all of them. And in particular, intercompanies. There's no need as an organization to have accountants focus on the intercompany when we can automate that process. These journals should be happening within the system if we have a good, controlled environment, but importantly, having the ability to have some benchmarking and analysis. And so this is where, from an accounting perspective, we start looking at where in our whole process can we drive some automation. And here's some examples. Account reconciliations. Why can't they be created for us? Again, the preparation of the account rec, as in the preparation of trial balance, should be able to be done automatically. And it's then the value add is the analytics. And that's where we have the flux analysis. So we can actually produce reports that drive the understanding of the variance, and then we add the value. Journal entries can be automated. Reporting, intercompany transactions can all be automated in that process. And this is where we want to take you on this automation journey. Easy, low hanging on the left-hand side where we have your different phases. And this can be over a 6-month, 12-month, 2-year period, depending upon what the struggles are within your organization and how open you are for that automation journey and engaging other robotic processes. But we need to get to a point that we understand what we're doing today, start the automation, and then bring that on that continual journey. So things are happening, and on the furthest right hand side, having a fully transformed and automated process. And just highlighting some examples of different types of automation that we've got going on in there. So for example, payroll, gift cards, accruals, credit cards, all of that being captured in that space. And then this is really where we go into an example of where we can actually automate your reconciliation. So we're going really cool back to the actual accounting world. So we have your transactions that come in. Again, we want the system to run the matching for us based upon rules that we've intervened and we understand are correct. They will then produce exception items that need to be investigated by the human being. They can then auto-populate on the face of the reconciliation. We can auto-generate journals for any reasonable variances that are in there. So if it's out by $1 or a couple of cents, we're not going to be overly concerned there. And then even to the point of allocations. So if we can get to that end-to-end process where the system is doing it for us, we then free our users up to focus on the actual analysis, the value add, being that strategic partner to the business and providing more real-time information back to our users. And this is where we then take you on this transformative journey. So it's really about understanding how we can free up resources from doing that robotic process. And so we give that over to technology. So prepayment journals, accruals, manual variances can all be processed that way. Understanding the workload, how it flows across the actual period, who's doing what within the organization, what the dependencies are in that space, and then continually going through that journey of improvement for benchmarking to actually understand how can we do it better, but not just within our organization, but also amongst people in the same industry, in the same region, globally, to understand how we can do it in that solution. And the key attributes of continuous accounting is that it must be real time. It's got to be data rich, and it must ultimately be secure. So you need to ensure that technology has the ISO 27001, we have the SSA 18 certification, that all your data is held and is fully encrypted, both in transmission and at rest. And there's a continual review of this information, but having it being data rich and having it being pushed. So again, we're focusing on the exceptions. And really, it's about that real-time preparation to ultimately get you to that point in time close. So we can have our hard close, we can also have soft closes as we're going through that process. It's about driving that automation overall. And by going on this journey and removing the human component from doing repetitive tasks, we move that traditional record to report assembly and process that we go through where there's minimal analysis till we start the crunch of the month end. And then we go into the period end close, that big peak between the 25 and 35 days when there's no analysis being done because we're just so busy doing the doing versus actually focusing on the analysis. So we want to move from there into a more streamlined analytical process where we're looking at what's going on. We have exception reporting that drives our activity, our focus to, again, focus on what's important. There's still going to be some subjective adjustments as we get through our month end, but it's a much smaller peak in that process. And that's really the drive for organizations to reduce the time that's given over to those manual labor intensive activities. Now there's 5 steps to help you get there. So split what we're doing today into much smaller tasks. So again, going back to how do we first go into this transformational journey is understanding, well, let's break into smaller tasks. Let's make sure we can actually work for us and what makes it right at that point in time. Schedule the task as early in the process as possible so if there's any issues as we're going through, we have the time to correct. We're not always being reactive. In this process, we're driving that proactivity. We want to be proactive in the whole approach to make things work for us. Embed those tasks in what you're doing on a daily basis. So there's no need to say, well, I can only look at my accruals at the end of the month. I could be starting my analysis as I'm going through, maybe 5 days, 10 days before my close, looking at my clearing accounts, making sure things are working for me. Automate wherever possible, but automate what works. Don't automate a bad practice. And then have the ability to monitor, to intervene in a real-time basis. So we can't be being reactive. If something's broken, we need to know about it as soon as possible, so have alerting functionality that triggers that in the system for you and have a measurable success. And it is achievable today. This is not sci-fi, this is real. What we're seeing is that from an automation perspective, across mid-sized organizations in North America and Europe, that they are close to automation, and 80% of customers are really driving that forward. And we saw that with Gartner for the mainstream organizations. Another review that was done by SSON on the saturating of business services. 2/3 of shared service leaders are already planning to automate up to 60% of the processes within their organization. So again, utilizing technology in the right way, engaging robotic processes to drive the automation. So if we have people doing something that's very repetitive, very easy and open for programming, let the system do it for us. And you have lots of technologies out there today that can engage there. And then even going back down to, say, intercompany, 30% of companies are now automating 75% of their overall intercompany transactions and reconciliation. So again, we're eliminating the need to do things just because we've always done them and doing them on each month. We're now driving it forward to actually say, well, let's look to actually see virtual improvement there as well. And that was a survey done by the Hackett Group. Some real life customer examples. So Coca-Cola moved its shared services and they were able to achieve, through engaging technology, including BlackLine as one of them, a 50% reduction in their accounting FTEs. And that was by driving 40% of their recs being moved to the shared services. And there was a tangible saving through this change. Another company, Cox Communications, a US telecom company, was able to save 52,000 man hours across that whole process and divert it from doing manual repetitive work into greater analysis. And we see some examples of their journals being automated and the number of recs being processed there as well. So it gave greater clarity and ownership to the overall process. Another logo that we have here is, again, looking to the automation to actually increase the amount of time they're spent on the value-added activities such as reviews versus spending time on the doing. And that then helped to increase their compliance overall. And these are just some examples of where companies have actually made some tangible changes through engaging technology, to use it as a disruptor to drive their automation with their actual systems. And a final quote from Deloitte, executives have indicated that their top priority now and in 2025 is continuous improvement. There is an established relationship between continuous improvement and automation, with both featuring prominently in most transformations. The robots are coming. We have to embrace that technology to actually drive us through into that overall perspective. Opening it up for questions.
Brilliant. Thank you so much. That was fascinating. I listened to a lot of presentations, as you can imagine, on RPA and shared services. And that was one of my favorites. That was really good and really practical. I think the audience will really benefit from that. We do have questions coming in. First up, I'm going to ask, there's been a question from Shri Jo, and they ask, would you look at the same level of benefits and needs for RPA in an offshore or remote worker as opposed to onshore? Does the same apply?
Well, for me, the location doesn't matter. We're finding that there's a lot of automation that's being processed both offshore and also onshore as well. What we're looking to is the actual activity that's been undertaken, not necessarily where the location's been undertaken. So really it's about what are we doing today, what's the best resources for it, and how do we improve it. So location we're not seeing as being a factor in driving this RPA forward.
Excellent, excellent. Yeah, and another question comes, how do this, I heard you mention data and analytics. How does this all link with customer analytics initiatives? Can you link the data that you're analyzing in the back office to revenue and front-end customer analytics initiatives?
Absolutely. So when we're talking about the data, it's about understanding how it can be that strategic partner to the business. So ideally, we need to focus on how we can actually drive revenue, understand our marketplace, understand the customer, because that's really where the value add is going to be, but not to discourage what we're doing from that traditional core accounting process. We still need to do that, but really for us to be that partner, we need to have processes in place that help us to trigger that. If we're going down the path where our market segmentation is not really driving the right activity, we can easily change and make the direction very, very quickly. So again, trying to drive that being proactive versus being reactive with our data.
Yeah, definitely. Yeah, I think every kind of organization at the leading edge of customer experience is looking at voice of the customer, data analytics, omnichannel analytics, and personalizing that experience, which can only come through good data analytics, which is not something that you can do manually necessarily, especially if you're a large company. Another question that comes in a little bit more specific is on looking at the ROI for maybe a small organization when it comes to RPA, maybe a shared service center of around 80 people. Does the ROI translate in a slightly smaller entity?
Absolutely. So when we look to large organizations, yes, the ROI is going to be slightly high because you have more people dedicated to particular tasks. And in a smaller environment, you might have people that will cover multiple different roles. And so what we're trying to do there is not necessarily look to tangible dollar savings, as we saw with Coca-Cola. It might be, as we saw with Cox, man-hour savings. So it's really about understanding what each person's doing and what the return could actually be, even if it's only like 5 minutes. I was talking to one of my customers yesterday, and they said by engaging with this technology, they were able to save 3 minutes per day. It doesn't sound like a lot, but that 3 minutes over a period of time amounted to them to actually able to reduce the amount of people that was within their team and also bring greater clarity. So ROI is definitely achievable, but it will be on a smaller scale. But it's not just a tangible, it's also the intangible ROI you can actually achieve.
Mm-hmm. So it's really about marginal gains in a smaller company. Okay, understand. Something that a little bit kind of different is, but a hot topic for us at the moment is, Jorge asked, do you use blockchain at all to assure trust for the different parts of the RPA, or have you ever considered it?
We have, as an accountant, I'm always very interested in new technology that's coming out there, and there is a direction where certain companies are going down the blockchain path because you're in a secure environment and it's like exchange of trust. So you can look to that to eliminate a lot of the transactional work that's being done. So, for example, like subledgers, so that is part of that overall process. But it's a different path to that core RPA that we see today.
Absolutely. Yeah, something definitely that will be great to discuss more. So yeah, next time we'll see if, you know, the next year when we're doing this again, if blockchain became integral and part of the conversation in a bigger portion. Time for 2 more questions. First of all, looking at, you mentioned before about what you should look for before you start implementing the RPA, and you mentioned one thing was your risk exposure. What kind of things should you be looking for when looking to identify your risk exposure before RPA implementation?
So really it's about understanding you as an organization, how risk adverse you are or risk forward. It's about determining, if I make a change here, what's that ultimately going to be? So is there a financial risk? Is there a risk to my human team? And really breaking it down as to where I can actually focus on driving it forward from being taking a company from being risk adverse to being risk forward. You have to understand what your processes are today, measure and apply a measurement of risk. So if I don't do my reconciliation, for example, that's got $5 in there, probably not going to be overly exposed. But if I don't do my reconciliation, it's got $1 million in there, or I don't do my cash accounts, then that's a greater risk to my organization and to my financial reporting. So you need to have some type of risk profiling that you can apply to the activities, to the nature of what you're trying to achieve, and then be able to move that forward. So it's quite a hard definable answer to give you on that, because it's about risk profiling. And some companies will be, and you might have a company that's very risk conservative or risk adverse, then you might have an individual that is really pro moving forward and will wear the brunt if they do fall over. So again, it's about the individual and the company as well needs to be considered.
Yeah, absolutely. Okay, understand. Hope that's answered your question. Final question that's come in from Shri Jo asks, would you have dashboards to monitor bots and use data from RPA into analytics around process improvement? So yeah, how do we get that kind of real-time analytics or reporting that we need?
Oh, absolutely. You cannot engage with any type of robotic process without any measurement of success. So you need to have dashboarding, you need to have some alerting functionality. So I've seen other companies have actually started embracing alerting, so that something falls over, they get an alert to their phone, so they're triggered to say that there's a problem. But you need to have that data being fed, have some type of traffic lighting, so red and green, so red is bad, green is good, and be able to measure how well they're actually going through that journey. You should not go down a path of having RPA if you do not have any ability to measure what's going on and have any alerting functionality.
Yeah. Okay, excellent. Okay, that's all we have time for. Thank you so much for your presentation. And as before, Anne will be sharing her slides, so you can go back and look at anything that you missed. And she'll also be available along with the BlackLine team in the exhibition. So BlackLine have a booth. You can click on it to get loads of great collateral, reports, white papers. I've seen a few really interesting stuff. And you can also talk to the BlackLine team in our chat room. So they'll be available now. So go in and ask any questions that we've missed. Otherwise, I'm going to see you all back at 12:30 Singapore time. We've got the next session is on something equally kind of practical step-by-step guides, and it's on industrializing and tracking your RPA program through the RPA balance scorecard. So just kind of carrying on from what we were speaking about how you track your RPA program, how you justify the spend, how you look at the ROI, how you make that case to your management, to your senior level. And that's going to be giving you some really, really practical steps on how you can go about doing that. That's going to be with EdgeVerb Emphasis, and as I said, that's going to be at 12:30. So I will see you back here then. Thank you.